Donald Trump's trade war is taking a significant toll on the global economy, according to the OECD. GDP growth in the US will slow from last year's 2.8% to 2.2% this year and 1.6% in 2026, according to the OECD's first attempt to quantify the economic drag from the tariffs announced since President Trump returned to power. The organisation also said higher trade barriers will leave inflation high and force the Fed to keep rates on hold until the middle of next year. Well, Josh Passmore is an investment manager at Artemis. Josh, clearly there are increasing concerns about the US economy, but how worried is the market?
Morning, Elena. It's an interesting question. I guess the key point for me is whether the soft data, which has deteriorated significantly. So I was reading this morning, CEO confidence in the US has fallen the most since 2008. Whether that soft data begins to translate into more negative hard data. Really interesting that the actual Trump trade was to buy treasuries and short equities. I think that is the exact opposite of what we expected at this stage last year.
Do you think then that we'll see an ongoing move out of US equities? As you already said, of course, the S&P 500 and the Nasdaq have had a bad couple of weeks already, but President Trump doesn't seem too bothered by it.
It's interesting, isn't it? I think the ingredients, if you like, are definitely there for a further rotation. You've got pretty high valuations in the US and pretty sort of bullish sentiment until very recently. And if we maybe look at Europe and China, against that, you've had pretty negative sentiment, pretty negative flows, and you've also got very low valuations. So I think there is a little bit of mean reversion that could continue there. The uncertainty around Doge, tariffs, etc., and more recently DeepSeek, questioning sort of, US AI supremacy, the enormous investments that these massive companies are putting into AI infrastructure, has just started to question whether they can sort of sustain these hugely dominant positions in equity indices going forward. I think it's really interesting that Alibaba has outperformed Nvidia by more than 70% since inauguration day, but it still trades on half the multiple. So I think if you look at pretty high valuations in the US and pretty sort of positive flows over the last few years, and if you contrast that with negative flows and low valuations elsewhere, I think we could definitely see this rotation continue.
Do you think it might be time to put money back into China, which, as you say, has been broadly unfashionable among foreign investors for a couple of years, but we now are seeing some brighter data there?
I think China's really interesting, actually, and just going back to a couple of those points I made a second ago. So valuations are pretty low. You're getting nice shareholder yield, so dividend plus buyback. And sentiment is very negative. Investors have been selling out of Chinese equities, saying it's uninvestable, etc., for some time now. The economic environment is still debatable and it looks challenging, but I think some very positive noise out of the government. So the state news agency is talking about vigorously boosting domestic consumption, which will be very important in getting the wheels in motion for the economy again. But I think the risk reward, given pretty negative sentiment, huge underweights almost everywhere, and some more positive noise from the government, looks really quite interesting from here.
The other huge story this week, Josh, could potentially be moves towards a ceasefire in Ukraine. What market impact could that have?
Yeah, very interesting. So the ruble is up over 35% versus the dollar year to date. So the currency markets clearly think that a ceasefire is more likely. I guess the broad theme in terms of hedge funds apparently trying to pile back into Russian bonds, etc., is that assets that might have had little or no value a few months ago might now have much more value, as if the US lets Russia back into the international fold, etc., etc. Second order effects, you might look at energy prices coming down. I think that's probably quite a likely knee-jerk reaction. Whether that will make a difference in terms of supply coming back into Europe, for example, from Russia, is much more up for debate. And if investors then extrapolate that to lower inflation, then some of the consumer sectors could do a little bit better. as could some of the more levered sectors like real estate. We'll see what happens when Trump and Putin meet tomorrow, but I do think this is going to be a very challenging and lengthy process, and it's probably not going to be over anytime soon.
That was Passmore of Artemis. Don't forget, you can watch more videos on Reuters.com.